Ever dream of owning a piece of some premium property here in India? Well, today we're going to unlock one of the smartest ways you can make that happen, even if you don't have locks and locks to invest. So yeah, this explainer is definitely for you.
Let's be real for a second. This is the big hurdle, isn't it? That dream of earning from property, it just feels so out of reach because of the huge amount of money you need up front. It's a barrier that, honestly, stops most of us dead in our tracks.
But what if I told you there's a way to completely sidestep that massive barrier? A way to actually earn rental income from giant malls and shiny IT parks with as little as 500 rupees. I know, it sounds a little too good to be true, right? Well, let's dive in and see how it really works.
So this solution to our problem, it has a name. It's called a REIT. That stands for Real Estate Investment Trust. And it's pretty much designed to solve this exact issue we're talking about.
Okay, so what on earth is it? Well, a REIT is basically a company that owns and, manages a whole bunch of properties that make money. Think big office buildings, bustling shopping malls. And here's the key thing you got to remember. In India, these are regulated by SEBI, which means there's a really strong framework there to protect investors like you and me.
Probably the easiest way to wrap your head around it is to think of it just like buying a stock. Instead of buying an entire building, which, is impossible for most of us, you're just buying a small piece, a single unit of the company that owns a whole portfolio of them. It's actually that simple.
Okay, so you own a tiny piece of this big company. But how does that actually turn into real money in your pocket? Let's break down exactly how these things can build your wealth.
The process is honestly beautifully simple. The REIT owns the properties. Then big corporate tenants pay rent to use those properties. Now here's the kicker. By law, the REIT has to pay out at least 90% of that rental income to its investors, and that's you. So you get this regular income, just like a landlord, but without any of the headaches. No calls about leaky faucets.
Now in India, these REITs are primarily focused on really high-quality commercial properties. Think about those swanky IT parks and huge office buildings where all the major companies work. And you'll probably recognize some of the big names that are listed on the stock exchange, like Embassy, Mindspace, and Brookfield. See, these aren't just numbers on a screen. They are real, tangible buildings you're investing in.
Okay, let's get serious for a moment. No investment is perfect, right? It's so important to understand both the really good stuff and the potential risks. So let's take a clear, balanced look at what you'd be getting into.
All right, let's break this down. On the good stuff side, that low entry cost is a total game changer. You also get that potential for regular income and high liquidity, which just means you can sell your units whenever you want, just like a stock. Plus, it diversifies your portfolio, and you have zero headaches about managing anything. Now, for the risks. There's market risk. Prices go up and down. They're also sensitive to interest rates. Basically, when rates go up, other things like bonds can look more attractive, which might push REIT prices down. Your dividends could be taxable, and since most Indian REITs are in office spaces, you've got that sector concentration, and of course, a big economic slowdown could hit the companies paying rent.
But if we had to boil this all down to one single idea, this is it. The crucial point, the most powerful benefit, is that you get to be in the real estate market, you get that diversification, all without the massive financial and logistical headache of actually buying a physical property yourself.
So, we've covered what REITs are, how they work, but now we've got to ask the most important question of all. Does this investment actually make sense for your financial life? For your goals? Let's figure that out. So, who should really be looking at REITs? Well, if you're a beginner just dipping your toes into real estate, or if you don't have a huge pile of cash to start with, or if you just love the idea of creating a stream of passive income, then yeah, REITs could be a really fantastic fit for your portfolio. Let's make this real. Let's talk numbers. Say you invest 10,000 rupees. You could reasonably expect a dividend yield of around 5 to 7% a year, and that's just from the rental income. That's your return before you even think about the potential for the price of your REIT units to go up as property values increase over time.
It's also really important to know who this isn't for. If you're trying to get in and out of the market real quick to make a fast buck, or if you expect guaranteed, totally risk-free returns, this probably isn't the game for you. REITs are really best for investors who have a long-term view and are looking for steady income and some moderate growth.
Okay, so after all of that, what's the one single thing you absolutely need to remember about REITs? Let's distill this whole thing down to its core idea.
This pretty much says it all. REITs are this amazing hybrid. They really do offer the best of both worlds. You get the stable, income-generating power of real estate, but it's combined with the total flexibility and easy access of the stock market.
And that just leaves us with one final question for you to think about on your own financial journey. With that low cost of entry, with professional management doing all the hard work, could REITs actually be the most intelligent, most accessible way for you to finally start building your wealth through property? The answer just might change the way you invest.